Tesla stock just had two price target increases, one from Wedbush Securities, which is basically Dan Ives, and then another one from RBC Capital. And Tesla stock today is up 2.5%, while, and this is the important part, the markets are down. So today is actually quite an impressive day for Tesla stock. It also helps that Elon Musk won the 420 funding secured lawsuit, and Elon Musk will not be held liable for Tesla stock going down short term a few years ago. Tesla's inventory in the USA keeps going down, while those betting on stocks to go down are losing money basically. Thursday's short covering was the largest since November 2015 and ranks in the 99.8th percentile versus the past 10 years. Interestingly, the shorts have been sort of quiet lately about Tesla. I wonder, why is that? Dan Ives is increasing his price target for Tesla stock from $200 to $225. Tesla is now positioned well with its price points, with demand outstripping supply so far in 2023. While China demand was a headwind for Tesla in Q4, that was quite concerning for so many people. With the lockdown and macro uncertainty, we are now seeing a noticeable turnaround for Chinese EV buyers favoring Tesla versus domestic players such as BYD, NIO, XPeng, Dan Ives said. Dan Ives is also saying that their survey shows the price cuts have swayed 3 of every 4 buyers of electric vehicles in China. It also said Tesla is trending above its projection to deliver 1.8 million vehicles worldwide in 2023, which I think should be obvious. The only way I think we are not getting to above that is if we have multiple things or one big thing going quite wrong, such as, for example, a factory shutdown, another conflict between countries. Or imagine if an earthquake happens. Possible. It could happen in California, as an example. That would be a bad year for Tesla stock then. Assuming nothing crazy happens, I would expect Tesla to be closer to 2 million deliveries for the year instead of 1.8 million. Dan Ives also likes the $7,500 incentive for all of Tesla's SUVs, which includes all Tesla Model Y trims, which before only 7-seaters were considered SUVs. That's I would say, a fairly reasonable reason to increase the price target. Dan Ives also likes what is happening with Twitter. The Twitter overhang is slowly moving into the background for Tesla's stock. We believe with Twitter itself starting to stabilize more from an advertising perspective, along with cost cutting kicking in, the worries around Musk needing to sell more Tesla stock to fund Twitter losses has moved into the background. And here's what RBC is saying about their price target increase. Tesla is demonstrating they can spur demand growth while maintaining margins above 20%, which is what we learned from the last earnings call. Basically, Tesla is saying we expect still to be over 20% gross margins even after these deep price cuts. A positive for the near and long-term outlook. Competition is responding, for example, Ford Mach-E, but we do wonder about the long-term sustainability of competitor price cuts, given more challenging profit margins. Gary Black is excited about the Investor Day on March 1st, and he believes that the 2 big upsides on that day are likely to be the Cybertruck and the Megapax. He thinks that the Wall Street consensus is going to be quite wrong. He says the actual deliveries could be double of Wall Street's estimates. Can you believe that the Wall Street consensus for total Tesla deliveries is only 4.16 million vehicles for the year 2027? If you do a 50% year-over-year projection, which is what Tesla is saying they will do, we would be at about 9 million deliveries. Wall Street is only at 4 million. You just know this is not going to age well at all. This police department expects to save $84,000 over the next 10 years by purchasing a Model Y instead of a Ford Explorer hybrid. This is despite the Model Y being $18,000 more upfront than the Ford Explorer. This is because of fuel savings, obviously, but also because of the maintenance costs. And also, most importantly, the internal combustion engine cruiser is only expected to last 5 years compared to 10 years for the Model Y. So when you compare the two vehicles side by side, this is what you get. No oil changes. You get regenerative braking. The battery is designed for 500,000 miles. The motors are designed for 1 million miles. You get a 5-year warranty, of course, also. It is the most American-made vehicle. It has the best crash test ratings. It has superior performance. The cars are really fast. So you are not going to get away from anyone chasing you in the Model Y. And then you have a long vehicle life. The Ford Explorer is a little bit bigger, but not by much. Ford Explorer overlapped on the Model Y, and this is where the Model Y ends. So you can see it's a little bit smaller, but the Ford Explorer is not that bigger. I mean, you do have more trunk space, but it's just a tiny little bit longer, not by much. And with this extra equipment, this Tesla Model Y looks pretty cool. The Tesla economist has been valuing Tesla more as a battery company. And he's realizing that has not been the right way to do it. He just realized he should be valuing it more like an AI company in a sense that a lot of the growth will come from that eventually. He says it's a new paradigm, which to me that was obvious the whole time. ARK Invest says that without full self-driving and all of these crazy things, Tesla stock by the end of 2026, they think is going to be $500 per share. Stephen Mark Ryan is making fun of analysts changing their price targets. I believe he's specifically referring to the knives. Here are market expectations for the interest rates. So there are a few more interest rate hikes expected, but then if this does play out like this, then I would say this is a great opportunity for growth stocks such as Tesla stock. But these expectations are often wrong. Turns out we did not really have transitory inflation. We had to raise interest rates a lot to start fighting that inflation. Jim Cramer now says he would choose Tesla stock over Ford stock or GM stock. He says that because Elon Musk is no longer selling Tesla stock, Ford had a bad earnings call, and that Ron Barron is going to come on the show and say, oh, Tesla stock will be worth $1,000. And Jim Cramer basically says, oh, well, how can I say no to Tesla stock now? Well, here's what I think. I wouldn't really make a big deal out of this. I mean, next week he could change his mind again, or a month later. So also just a week ago he was recommending Ford over Tesla. Ford so far is not having a terrible year. It's up 12.5%, but that is nothing compared to Tesla's 80% year to date. And here is the buying opportunity for Tesla stock explained by Elon Musk. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. And I'll be making more videos once my voice feels better. It has been quite annoying not being able to make more videos when I want to make more videos. Well, not much I can do. I just need to wait for my voice to get better. Thank you for watching.